was one of those weird moments where bad news is actually good news for equity prices.
So, we typically start at the 30,000 foot view and, look at the indexes and kind of see what signs they're giving us. It definitely, as unsettling as days like Friday can be, it's starting to get the sense of wash, rinse, repeat, and then it just keeps going higher. So, let me just put it out there. I mean, if you're looking at this, is there a sign that we can say that cycle is going to change?
Well, I mean, John, I still think that we're still in really constructive trading, obviously, but it was one of those weird moments where bad news is actually good news for equity prices. Of course, that can't continue on forever, but in that moment in time, this market is so focused on rate cuts right now. Any bit of data that it can get that is confirming that we are in for rate cuts and perhaps a series of rate cuts or even larger rate cuts, referring to the Fed, of course. After last week's jobs report, there started to become some whispers around the market that we may not even be in just for a 25 basis point cut. I mean, the market's all but factoring that in now, but in fact, maybe even having a 50 basis point cut in place, so a double rate cut perhaps being on the table at next week's FOMC Fed meeting. So that's what the market's squarely focused on right now. And of course, Friday's jobs report confirmed that seemingly rate cuts are on the way. That's how the market that's how the market digested that. That's how they understood it.